Welcome to today's explainer. We're looking at a market caught in a massive paradox today. Picture this. It's June 30, 2026, and imagine a world where the undisputed heavyweight champion of the financial system, the US dollar, is showing fatigue, yet the global market remains incredibly cautious. It's a high-stakes environment where one shifting variable can send shockwaves across every single asset class. 52,000. That is the massive point level the Dow Jones Industrial Average is hovering around right now. This number really sets the sheer scale and magnitude of the markets we're dissecting today. We aren't just talking about minor blips here, We are analyzing literally trillions of dollars shifting across the global stage in real time. So, here's our roadmap for today. We'll be covering the market landscape, US dollar strength, gold and crude oil, the US stock market, and finally, crypto awaiting a catalyst. Part 1. Market landscape, cautious sentiment. Okay, let's dive into this incredibly unique setup. Geopolitical tensions in the Middle East are actually cooling down. Normally, that's a huge green light for aggressive risk-taking. But instead, capital is stubbornly sticking to the US dollar. Why is that? Well, it's because the whole financial world is basically glued to the calendar, holding its breath for the upcoming Nonfarm Payrolls report. That single data point is absolutely crucial. It's the linchpin that's going to dictate our next major global trend. Part 2. US dollar strength, foreign exchange. The DXY hit an absolute brick wall at the 101.8 mark last week. That rejection showed some clear short-term weakness, dragging the index down about 0.7% to around 101.3. And the expectation from the source analysis is that we'll see some continued near-term fatigue. But hey, make no mistake, looking at the midterm, the US dollar is still the undisputed strongest asset out there. And it is incredibly fascinating to watch the domino effect of that dollar movement. Against the Canadian dollar and the Swiss franc, the analysis predicts a 0.8% technical downward correction. Meanwhile, across the pond, the euro and the British pound actually managed to catch a bid. They pulled off these slight 0.4 to 0.5% recoveries that kind of completely defy the current policy gap between the ECB and the Fed. Crazy, right? So this begs the question. If the dollar is the sun in our financial solar system, what happens to the physical Earth? How does this slight weakening of the dollar's gravity, combined with those easing geopolitical tensions, affect the tangible raw materials that literally power our world? Part 3. Gold and crude oil. Commodities reaction. Wow, it is a bearish reality for gold right now. The metal is under some serious, heavy pressure, opening the session with a pretty harsh 1.85% drop down to roughly $3,950 an ounce. Because the US dollar is remaining structurally strong and the Fed is staying hawkish, gold has essentially had its safety badge stripped away. That desperate market need for a safe haven asset, it's just vanished. We've got a perfect contrast going on here. On one side, gold is really struggling without that safe haven status, so definitely not a buying opportunity just yet. But then there's WTI crude oil. It's actually stabilizing right around $70 a barrel. Following diplomacy signals between the US and Iran, those massive fears of a supply disruption just plummeted. Combine that with the dollar correcting and no new supply gluts, and oil is actually looking positive. The source is even targeting a move up to $72. Okay, so commodities are giving us this very logical, predictable reaction to geopolitics and currency. But what about the stock market?
Part 4. US stock market surprise. Resilience amidst risk.
I gotta admit, this one surprised me. We are seeing just a sea of impressive green numbers for the major US indices. The news of the US and Iran resuming dialogue didn't just calm down the oil markets. It injected a massive dose of pure optimism straight into equity futures. It completely defied all those bearish expectations of a structural breakdown at these all-time highs.
What's really wild here is the distribution of that green. The Dow Jones is up 0.59%. The S&P 500 pushed up to roughly 7,400 with a 1.3% gain. But the NASDAQ composite, it is showing a massive 2.7% outperformance, catapulting it to roughly 29,700 points. Tech is absolutely roaring back to life.
Actually, scratch that. Let's hold our horses. Before we all get swept up in this tech euphoria, we really need to look at this quote from the source analysis. It notes that, although cash flow has returned, they do not consider this a good opportunity. The short-term trend of the tech sector is still quite fragile. So despite that massive 2.7% jump we just talked about, the underlying threats of sudden profit-taking and those deep, lingering fears over AI valuations, they haven't disappeared at all. The foundation of this whole rally might actually be built on sand. Which naturally leads us to our final question today. If traditional tech stocks are soaring but fragile, what in the world is happening with the ultimate high-beta risk asset? What's going on in the digital asset space?
Part 5. Crypto awaiting a catalyst, waiting for a spark.
Well, while Wall Street equities are throwing this surprisingly green party, Bitcoin is flatlining. It's hovering right at that absolutely crucial $60,000 support level. And Ethereum, it's showing the exact same sideways, snooze-fest price action. Neither of the major players has managed to establish any sort of real trend. The reality here is simple. Crypto is just stuck going sideways. That overarching strong US dollar we discussed earlier, it's acting like a giant wet blanket over the entire digital asset space. The analysis is crystal clear on this. Until the US dollar actually weakens and global liquidity sees a significant improvement, expecting a sudden sustainable crypto bull run is just highly unrealistic. And that brings us full circle, doesn't it? Equities are climbing a wall of worry, gold is sinking, oil is stabilizing, crypto is fast asleep, and the US dollar is taking a brief rest on its throne. The whole system is basically holding its breath. So, the ultimate question you should take away from today's explainer is this. Will this week's US Nonfarm Payrolls report be the spark that finally breaks the tension and unleashes the next wave of global liquidity? Keep your eyes on the data.